Hi, this is Vijay Vambani. I hope you're enjoying my videos and they're adding value to your journey as a trader, and it's helping you become better traders, earn higher profits from the markets, and decipher the signals of the market better than before. Now, in this video, I want to tackle a topic which should concern both commodity and equity traders alike. You see, OPEC Plus, which is OPEC as oil exporting countries, and certain non-OPEC members like Russia being the largest one, are now called OPEC Plus. So a collection of OPEC and non-OPEC countries have met for the second day today on Tuesday, which is the 5th of January 2021, and have had an inconclusive meeting. At the crux of the matter is the difference of opinion between OPEC on one hand and Deputy Prime Minister of Russia Alexander Novak on the other hand, as a OPEC Plus, which is a non-OPEC temporary member of this cartel. The difference of opinion being whether oil output, production output, should be hiked again in February. If you remember, OPEC was supposed to have hiked the output of oil by 5 lakh or 500,000 barrels per day in January itself, which it did. Now the meeting was whether the output hike should be stepped up by another 500,000 barrels a day on 1st of February and onwards. The Russian Deputy Prime Minister Alexander Novak was pushing for further output hike because Russia desperately needs the oil revenues and it's facing its own economic slowdown. And let's not forget, Russia is not as integrated into Europe as certain other European nations are. So the coming few quarters are likely to be harsher for Russia as compared to its other Western countries. So the Russians want an output hike. The Saudis, led by the oil minister Prince Abdulaziz bin Salman, are opposing the output hike. The Arab countries do not want an output hike for the simple reason that COVID's resurgence with certain other mutant variants of the COVID virus which are seen across Europe are threatening to basically result in fresh lockdowns in Europe and therefore compression in oil prices at the pump and basically lack of demand. Now, demand erosion is a nightmare that the Saudis have been grappling with since 2014. If you've read the OPEC statements, I have, and they are basically cutting output not to raise prices, but they are basically trying to stop the decline. Now, that's a big difference. Not wanting the price to fall and wanting to rise are actually two different things. So the OPEC has been basically clamoring to stop the price from falling, which is a very defensive act. How does it matter to an average Indian? The matter is absolutely simple. With oil output not being hiked, oil prices will jump, which it already has on the MCX. I'm seeing at the time of recording this video, late evening on Tuesday, the 5th of January, oil is up more than 150 rupees a barrel on the multi-commodity exchange in India. And since the last couple of weeks, the Indian government has been resisting the pressure to hike prices at the fuel pumps in order to not trigger any stepping up of consumer price inflation, CPI, which is a retail inflation. As we all know, oil is a multiplier commodity. If you raise the price of oil at the fuel pump, everything from your fruits, vegetables, milk, eggs, grains, pulses, everything basically becomes more expensive. And we do not want higher inflation at this point in time when CPI, or the consumer price inflation, is already rising. So, as and when the government resists the temptation to raise prices, the oil marketing companies are suffering losses, which would mean that the PSU stocks, now remember, I've been talking a lot about PSU shares in my recent videos, and the PSU stocks, especially the oil marketing companies, will tend to feel the heat if their cash flows are basically compressed. Now, if at all oil prices continue to rise because OPEC Plus decides not to raise the output, at some point in time the government will have no choice but to raise prices. So if they raise prices, maybe the PSU share prices might rise, but life on the whole for us will become a little more difficult because we'll be buying our essentials and food and other perishables at higher prices. And if the price is kept constant at the pump, PSU shares will fall. So what has happened in this inconclusive meeting with OPEC will impact you and me, whether you are a commodity trader or an equity trader, all of us. And if inflation was to go up, even the banking stocks will take the heat. It might even slow down the recovery post-COVID if oil prices were to shoot up. I'm going to keep my ears to the ground and monitor this extremely critical situation on your behalf, and I assure you I'm watching the scene unfold as it does in real time. Does it mean that this will have a rub-off on gas prices? Yes, definitely. Even gas prices are rising because of this unusual decision not to hike output in February. Do remember that this is the winter period when cyclically, as I have spoken in many of my previous videos, when cyclically gas prices do tend to be high, only to taper off and fall after the vernal equinox, which is the onset of summer. So this is going to be a winter of discontent for many countries. Take the example of Japan, which is basically cutting the production of electricity due to shortage of fuel. There has also been problems in Delhi, as we've seen in India, where people are spending a hard time in the shelters due to lack of electricity, etc. Now, this is a problem which will need watching. Whether you're connected with the stock market or disconnected from the stock market as a lay investor, a lay citizen of this country, oil prices will impact all of us. As I said, I'm going to be watching the situation at the ground level, and I promise to bring you updates as and when available. On this somber note, I bid goodbye to you in this video, not before assuring you that I will be back again in my next, bringing you some more market-related information. If you're watching this video on YouTube, please don't forget to click like on this video if you liked what you saw, subscribe to my YouTube channel, and click on the bell icon to get instant alerts about fresh videos whenever they are uploaded. In the comment section, do let me know what you think about this video and what you would want me to record next. Also, help me reach out to fellow like-minded investors and traders who prefer a 360-degree worldview and knowledge-based investments and trades by sharing this video with your family and friends. Do take very good care of your health, your family, your friends, your investments, and trade. Have a very, very profitable day ahead. This is Vijay Bambwani signing off for now. Thank you for watching me. Take care. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.